From Business Insider comes this headline on June 16, 2024. Stocks are in a sweet spot, but bears still fear a bubble is near bursting. Here's what 5 forecasters are saying about a potential crash. The article begins with 3 bullet points. 1, quote, stocks have been on a tear, but there are still bears sounding alarms of a bubble about to pop, end quote. 2, quote, bearish forecasters predict a crash as lofty valuations come back down to earth, end quote. And 3, quote, some big-name investors say stocks are flashing a number of warnings that a sharp pullback is near, end quote. Here's the lead, quote, stocks just keep climbing in 2024, but the bears haven't been silenced, and some are warning that the market is in a bubble on the verge of bursting, end quote. The story continues. Quote, fears of a painful sell-off have been rising in recent weeks, particularly as stocks continue to break through to record highs. The S&P 500 and the Nasdaq hit 4 straight all-time closing highs this week, with tech titans like Apple and Nvidia continuing to soar past a $3 trillion market cap. But the bears on Wall Street warn that the enthusiasm for artificial intelligence mirrors the internet bubble of the late 90s, and the recent run-up in stock prices is a bad omen for investors. Here's what 5 forecasters have to say about the latest rally, and why they think the stock market is headed for a fall, end quote. The story then lists the 5 forecasters, beginning with economist Harry Dent. Quote, stocks are in the midst of the bubble of all bubbles, and equities could lose more than half of their value as inflated asset prices finally burst. When the bubble finally pops, the S&P 500 could drop as much as 86%, while the Nasdaq could drop by around 92%. That bubble, which has formed over years of loose monetary and fiscal policy, is already showing signs of topping. Stocks are barely making new highs, and equities have likely been inflated for the past 14 years, longer than most historical bubbles, which typically last for 5 to 6 years. It's been stretched higher for longer, so you have to expect a bigger crash than we got in 2008 and 2009, end quote. As I pointed out via blog post on February 22, 2011, Chair of the Federal Reserve System, Ben Bernanke, finally admitted that almost every bank in the U.S. almost failed shortly after the price of oil peaked in mid-2008. My post at GuyMcPherson.com was titled Demise of the Dollar, and it quoted Business Insider in concluding that only one bank in the U.S. would have survived the so-called Great Recession in the absence of a bailout from the Federal Reserve. After Harry Dent comes John Higgins, the chief market economist for Capital Economics. Higgins indicated stocks were in a late-stage bubble. Quote, bubbles tend to inflate the most in their final stages, as the excitement sort of reaches fever pitch, end quote. Elite investor John Hussman is quoted next. Quote, I continue to view the market advance of recent months as an attempt to grasp the suds of yesterday's bubble, rather than a new durable bull market advance. I also believe the S&P 500 could lose something on the order of 50 to 70% over the completion of this cycle, simply to bring long-term expected stocks to run-of-the-mill norms that investors associate with stocks. Put simply, my impression is that the period since early 2022 comprises the extended peak of one of the 3 great speculative bubbles in U.S. history, end quote. Next up is Richard Bernstein, the Chief Investment Officer for Richard Bernstein Advisors. In his worst-case scenario, he predicted the most highly valued mega-cap stocks would lose 50% of their value. He focused especially on the top 7 mega-cap stocks. He said, quote, that's what I think we're looking at. It's multiple years of significant underperformance, end quote. Fifth and finally, UBS is a multinational investment bank and financial services company founded and based in Switzerland. UBS indicated there are 8 warning signs of a market bubble forming, and 6 of them have already flashed. You might be wondering why a collapse of the stock markets matters to you. After all, we rarely hear about the Great Depression and its impacts. Notwithstanding misinformation and failure to report from the corporate media, our lives are inextricably connected to stock markets. I have not had any money in any stock markets for more than 15 years. As one result, I have missed the considerable rise in value of the U.S. stock markets. As another result, I am well positioned to take a relatively objective view. A collapse of the U.S. stock markets will lead to a substantial reduction in industrial activity. As you know, this reduction will cause a loss of aerosol masking within 5 days. This will lead directly to a rapid increase in temperature. Considering the importance of the U.S. economy to the world economy, I doubt this temperature rise will be restricted to the U.S. In 2006, a book titled The Worst Hard Time was published. Written by Timothy Egan, it was based on interviews with people who lived through the Great Depression. These people had horrifying stories to tell about their experiences rooted in extreme poverty and hunger. Many people survived by eating pickled Russian thistle, which came from the USSR in the pockets of immigrants who were intentionally carrying wheat seeds and unintentionally carrying Russian thistle seeds. I read the book shortly after it was published, and I immediately referred to it as the second worst hard time. I knew that what lay ahead was worse than what had happened nearly a century ago, with the attendant unimaginable poverty and hunger. If you're watching this short video, this unimaginable poverty and hunger hasn't hit you. Not yet. However, many people around the world have lost habitat. Food and water are limited. We have 5 renowned individuals or corporations warning of a financially difficult future. If you're interested in good news on the financial front, I have a bit of that too. As with the June 16, 2024 story about the bad news bears, it also comes from Business Insider. It was published the day after the previous story on June 17, 2024, titled, "The Dow Jones Will Eclipse 100,000 on a Turbo Booster Combo of Earnings Growth and Fed Rate Cuts," Wall Street CIO says. This story contains a remarkable dose of good news. As with the story published by Business Insider the previous day, this article begins with 3 bullet points. 1, quote, "Interest rate cuts and continued earnings growth will power the Dow Jones to above 100,000 within the next decade." 2, quote, "Stock prices love strong earnings and lower interest rates," Main Street Research CIO James Demmert said, end quote. And 3, quote, "Demmert said investors should overweight technology stocks on a continued AI boom," end quote. The story begins with these 2 paragraphs. Quote, "A powerful cocktail of earnings growth and interest rate cuts will serve as a turbo booster for stock prices and power the Dow Jones Industrial Average to over 100,000. That's according to Main Street Research Chief Investment Officer James Demmert, who outlined a 7 to 9 year timeline for his uber bullish stock market call, end quote. It'd be great if we had 7 to 9 years. This seems highly unlikely based on the many peer-reviewed papers indicating near-term loss of habitat for human animals. This story in Business Insider closes with these 2 paragraphs. Quote, "While Demmert's prediction for the Dow Jones to trade at 100,000 within the next 7 to 9 years might sound pie in the sky, it wouldn't be out of historical norms if it did occur. The stock market has historically grown at an average annual rate of 10%. For the Dow Jones to hit 100,000, it would need to grow at a compounded annual growth rate of 11.2% over the next 9 years, end quote. I don't doubt that the stock market indexes could continue rising. I don't doubt they can, quote, grow at a compounded annual growth rate of 11.2% over the next 9 years, end quote. However, this all depends on one underlying factor. Humans must still be here. The absence of humans translates to the absence of stock markets, and therefore the absence of stock market indexes. I love the idea of humans on Earth in another 10 years. I love the idea of habitat for humans on Earth in another 10 years. It could happen, albeit only if the peer-reviewed papers I quote turn out to be wrong. There's a dream for all of us. You might wonder why I'm transmitting this information several months after it was published. Nearly every significant stock market collapse since 1929 has occurred during autumn in the Northern Hemisphere. If a collapse of the markets leads to loss of aerosol masking, therefore loss of habitat for human animals on Earth, I suspect this event will occur after early September. Here's wishing it doesn't.